Good morning, guys. I hope you're well and welcome to today's Forex market outlook. It's November 1st, 2017, and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com and Amana Capital. So we should be up and running. Now I'm using a new microphone today, so let me know what you think. Is it too loud? Is it too low? Does the sound good overall? Do let me know. Now we're going to take a look at the main currency pairs in this short update. But before we do that, as always, I need to stress that trading financial markets is unfortunately risky. There's a genuine risk that we'll lose all of our invested money. So please bear that in mind before you start trading. And I will also share with you my outlook on the markets. But just because I've been doing this since 2006, that will be 11 years from now, since then, doesn't necessarily mean that I'm gonna get it right. In fact, most traders get it wrong about 40 to 50% of the time. What is important though is that when we are right, is that we actually make money and make good money, whereas when we're wrong and losing, that we lose a little bit. As an example, you make 1.5% for each percent that you lose, or maybe 2% for every 1% that you lose. Or take it into trading terms, especially if we're doing Forex, if you're risking 30 pip, look to make at least 45 in return, if not twice that amount. Okay, if you want to ask me questions, then as you can see, there's a live chat to the right, and you can use that. And that live chat is with YouTube. So you need to have a YouTube account to ask me questions. You can, of course, ask me questions via Twitter. It's very, very straightforward. Just send your questions via Twitter to AlexFX00. But let's get going and let's begin. So this is the Euro versus the USD, and the market is bearish, as you can see below the 118.38 high, which is this level here created on October 26th. And if we look at it from a bigger perspective, if we switch to a daily chart, we can clearly see how the trend is bearish as price is creating lower and lower highs on the daily, and we're also creating lower and lower lows on the daily. Now, because we took out this level here, which was the 1664 level, which is a level I've been highlighting for quite some time, this opens up for a further decline to the downside. From a technical point of view, I'm already bearish from the 116.65 levels, and these are levels we touched already yesterday and the day before that, and I assume that we could easily move up higher. If we load a 4-hour chart, let me explain to you why that's the case. Well, if we use a Fibonacci tool from the high to the low, you can see that we have not even corrected the first fib, and many times we correct up to 50%. So we could easily swing up to 117.05, maybe 117.40, but already from this, which is the 1665 level, I'm going to be bearish, and if it swings up, it might take a day or two, but eventually I suspect this is going to go down lower. From a macro fundamental point of view, it makes perfect sense that this actually goes down, just because the ECB decided not to be hawkish and prolong the quantitative easing, and also say that the outlook for quantitative easing depends on core inflation and wage growth. Now, the ECB tends to overestimate where they think inflation should be in the future. So it's quite likely that, say, by the end of next year, wage growth and inflation is not as high as they wanted to. And if anything, maybe prolong quantitative easing for a bit longer. On the other hand, in the US, as you know, they're looking to increase interest rates. So yes, bearish below 118.38. It might move up a little bit more to maybe 117, but I'm already bearish from 116.55, and I think we can go down to the downside. As well, from a purely technical perspective, you have head and shoulders. This is the big head, this is the left shoulder, this is the right shoulder. And if we measure the distance between the neckline and the head, then you can see this is 405 pip. And if we now calculate from the breakdown, we can see that 405 pip is about down here at 112.73, so pretty much 113. So according to the technicals, this big head and shoulders pattern, 113 should be a relatively easy target for this market to reach. Now let's take a look at the next market, which is the pound. Now, because of better PMI manufacturing numbers earlier today, the market took out the high. So it took out the high here, which is the October 26 high, and it's now targeting the October 13 high here, created at 11 a.m. At 133.37. Now, this could easily try to move up to that level and maybe go a little bit higher. The daily pivot point or the weekly pivot point level is about at 133.65. So I think this can go up a little bit more. But guys, let's not get too enthusiastic here. Why? Because we have the ECB rate meeting. And while I do suspect that they're going to increase interest rates, the Bank of England, that's what I want to say. The Bank of England are famous really to say something and then they actually don't stick to it. That is why they call Mark Carney the unreliable boyfriend. So the market is pricing in about 80 to 90% likelihood of a hike tomorrow. If they don't increase interest rates, this currency pair is going to be down at 131. And if it takes out the 130.70 level, we're probably going to target maybe 128.52. On the other hand, because so many people are already positioned for a rate hike, we might just see this go a little bit higher and then push to the upside. So it's not going to be too much action here. But take out 33.37 and the market's probably going to target 34.51. Now you wonder, what's the good currency pair to trade if you're bullish on the euro pound as I am? Well, if you are bullish on the pound as I am, then check out the euro pound. This is a daily chart you're watching. And because of the better numbers from the UK today, the market decided to try to take out the September 27 low at 87.43. And I think when the increased interest rates, this eventually will go down. In fact, I think it will go down independently if they hike. Obviously, if they don't hike interest rates tomorrow, this is going to be trading at 89. But I think eventually they will increase interest rates in the UK because of the high inflation. And I do think it's time for the euro pound to be trading close to the lows here in the next few months, so around 84, which makes this a really interesting scenario because it's a potential decline here of about 332 pip. Here's your dollar yen. Now the dollar yen is going to be challenging 114.45 in the next few days. I mean, it did try to take out this level already last week on the 27th, but failed. You can see the price reversed here on the daily in July and in May. And if we clear this level, then yes, this is going to potentially target 115.38, which because of that rate hike and because stock markets are gaining, wouldn't surprise me if we actually do move up higher. But at the same time, you can see the market has rallied strongly here and it's limited by these highs. So I suspect it could be another day or a few more days here of maybe a false breakout back down to the middle. So a little bit of choppy price action here before the market decides. Again, if it's capped by that high, then we'll position ourselves for a bearish decline, especially if the market takes out the low here, which is 112.94. Took out that low, the market can go down to 112.23. So take out this low, goes down. Take out this high, we go up. If you want to position yourself because you do think we're going to go up, which again, according to the macro makes sense, then you're looking for a pullback. So you're looking at this low here, created on the 26th, and the exact level is 113.42. So from these levels, this market could potentially bounce. Let me see, I added the wrong sort of thing. There we go. The market could potentially bounce and head up higher. There we go, 113.44, that's the level you're watching. So potentially down and up, take out the low, goes down lower. AUD USD, this is a market that on the daily reminded me a lot about the euro. So you might remember we said take out 177.33, this market could go down, which it did. Now it declined quite a bit here, and the last major high is here at 78.84, and just a simple fib from this high like this shows that the market could, as a minimum, maybe go up to 77 and 22, maybe 77.50, but in the long run, if you're trading the daily, this is a bearish market, and I do think it will try to test 75.70 at one point. Now, if we take a look at this from a shorter time frame, like the 1 hour, the market, I'm willing to give this the benefit of the doubt, this little downtrend. So the market is pretty much bearish already from these levels, and I say as long as trade below this high here, which is 77.24, I suspect this can roll over and try to move down. Here's the New Zealand dollar versus the USD. So I don't know if you read the news, but it's one of the top read articles on Trade Captain today. But the New Zealand dollar, it surged overnight with 1% on the back of strong employment numbers, and that caused the currency to move up higher. Now, from a technical point of view, the market was trading sideways between 68.14 and 68.84, and the market, I suspect, to go a little bit higher, maybe to 69.43, maybe up a little bit more, but then eventually go down. I do think that with the new government in New Zealand, with their ambition to potentially look to add the condition for the central bank in New Zealand to make sure that we have full-time employment, I think that is something that could potentially, if it goes through, alter the way the New Zealand dollar is traded for the future. Why? Because up until now, the New Zealand central bank has its only concern has been inflation. But if you compare it with, say, the US, where they also have full-time employment, in the US they do quantitative easing, and now they're even doing quantitative tightening. So they're much more elaborate over there in an effort to try to get the unemployment to go down. And if suddenly this is a condition that the Central Bank of New Zealand needs to pay attention to, then there's a genuine risk that we see a weaker New Zealand dollar. Anyway, technically, I'm bearish below 70.04, can go up to maybe 69.43, but then I suspect this can go down again and test the lows. Final currency major is the CAD. So this is the CAD. So the CAD rose yesterday because GDP numbers out of Canada showed a contraction. Now, obviously, if you have a contraction in your economy, you're not doing too good, why do you want to raise interest rates? Now, obviously, this is more of a short-term measure, not the only measure that the central bank is looking at. But this caused the market to push up a little bit. Now, I suspect, if you look at this, the market is slightly overbought. It's quite clear to me, at least, to see that it rallied strongly, and if should actually be moving down lower. But for now, the short-term trend is bullish, and I assume that maybe from 28, 22 or so, some market participants are going to try to go long and just try to scalp this. On the other hand, if we take out the low here, this market could potentially continue to drift lower like this. And that, guys, concludes today's general market overview here at Trade Captain. What we're going to do now is going to see here if we have any questions. So we are all new to this. Obviously, if you don't have a YouTube account, I'll forgive you. I didn't have one either until I actually started to use this about a year ago. So to ask questions like hi 3012 here, send me, you need to be logged in here, and it's a free YouTube account. Now if you don't have that, we have Twitter, so most welcome to tweet me any questions you may have. And if you have no questions, then that's all fine as well. So if you just joined, by the way, this is a live webinar here at tradecaptain.com, and my name is Alejandro Zambrano. Okay, guys, so I have no questions. Hi, thank you so much for joining me and everybody else here on on Skype as well, Twitter. UK Kenny is here. Hi, Alex. Good to see you again. Mr. Mas as well. Thank you so much for joining us. Okay, guys, so I have no questions. So we'll wrap things up unless you're very, very quick to send me questions. I'll be back most likely tomorrow or in 2 days. That will be Friday, as we'll do an update on cryptocurrencies. And then as well, we're going to try to do an update on commodity markets. Soon as well, here at Trade Captain, we should have a technical analyst, which I will be working with and training with. So we can provide you guys with morning updates like this every day at 9 a.m. But it's going to take a little bit of time. This is the new website. Trade Captain is a website that is owned and managed by Amana Capital, which is one of the biggest brokers in the Middle East. And what we're trying to do now is obviously create something like a good website, better than what you're seeing right now at, say, Daily FX, Forex Live, and all the other big websites. So if you have any suggestions, do let me know. I'm always willing to listen. Okay, guys, have a good day, and I'll see you guys hopefully in the next few days. Thank you.